Happy Tuesday, everybody. Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. But first, just a quick piece of housekeeping. According to the analytics, it seems that there is quite a drop-off in viewership of China Update on Wednesday and Thursday, and this then begins to pick up on Friday and Saturday. It does seem that there is a degree of viewer fatigue by the middle of the week, so in order to enhance the viewer experience and also take a little bit of pressure off myself as I roll out this second channel, Market Update, which is also producing videos every day, I've decided that going forward, unless there is an emergency story or a very pressing story that needs to be covered, China Update will take Wednesdays off. So China Update will be up Monday, Tuesday, Thursday, Friday, and then usually also a Saturday episode. So there will not be an episode tomorrow, but there will still be 5 episodes per week going forward. Thank you everyone for all the incredible support and for your understanding with this particular point. Hopefully it is not too disruptive to your viewing schedules. I appreciate your understanding on this point. With that said, let's move into today's episode. During his recent tour of key Indo-Pacific military hubs, including Hawaii, Guam, and the Philippines, as well as Japan, U.S. Secretary of Defense Pete Hegseth offered reassurances that the U.S. would increase military strength in the Indo-Pacific to deter the PRC, underscoring China's status as the Pentagon's primary strategic concern. In a classified Department of Defense guidance memo obtained by U.S.-based The Washington Post this week, Hegseth stated, quote, "China is the department's sole pacing threat, and denial of a Chinese fait accompli, seizure of Taiwan, while simultaneously defending the U.S. homeland, is the department's sole pacing scenario." End quote. This directive marks a clear shift in U.S. defense strategy, with increased military investment in the Indo-Pacific at the potential cost of reduced focus on European theaters. Hegseth's diplomatic tour included commitments to deepen military cooperation with Japan and the Philippines. In Manila, he announced the deployment of an anti-ship missile system and unmanned surface vehicles for upcoming joint military exercises. In Tokyo, he described Japan as, quote, "an indispensable partner in deterring communist Chinese military aggression," end quote, and confirmed upgrades to the U.S. military operations in Japan, transitioning to a new, quote, "war-fighting command," end quote. A joint statement from Hegseth and his Philippine counterpart reaffirmed the 1951 U.S.-Philippines Mutual Defense Treaty. The statement explicitly extended the treaty's protections to armed attacks on either nation's forces, aircraft, or vessels, including those in the South China Sea. Classified Pentagon memo outlines a Taiwan-focused strategy too that prioritizes deploying submarines, bombers, unmanned ships, and specialized marine and army units in the region. The plan also calls for increasing pre-positioned military stockpiles, fortifying logistics networks, and reinforcing U.S. troop locations across the Indo-Pacific to ensure rapid deployment capabilities in the event of a crisis. Additionally, the U.S. is pressing Taiwan to, quote, "significantly increase," end quote, its defense spending to bolster its own deterrence capabilities. The memo emphasizes that Taiwan must modernize its military with advanced asymmetric warfare strategies, including improved coastal defense systems, missile deterrence, and a more agile and decentralized command structure. The increased emphasis on Taiwan reflects concerns that Beijing could attempt to seize the island through a rapid military operation before the US and its allies can intervene effectively. Taiwanese officials and analysts have welcomed the strategic clarity provided by the new Pentagon guidance. Jun Ji-shi, a former vice premier and National Security Council advisor, speaking to US media, expressed, quote, "Taiwan has not seen such a clear statement from the United States until now," end quote. William Chung, a researcher at the Institute of National Defense and Security Research in Taiwan, echoed the sentiment, noting that the memo confirms that, quote, "Taiwan is now at the center of U.S. global defense strategy," end quote. China has strongly condemned these developments, obviously. The Foreign Ministry spokesperson Guo Jiakun criticized the U.S. approach, stating that, quote, "military and security cooperation between the United States and Japan should not target any third country," end quote, and accusing Washington of, quote, "instigating ideological antagonism and inciting certain countries to be the cannon fodder of U.S. supremacy," end quote. Next up, the BlackRock-CK Hutchison Panama deal saga continues this week. After a week of complaining in state media, Beijing has initiated a formal review of the proposed BlackRock-CK Hutchison deal through the State Administration for Market Regulation, SAMR. The review focus on CK's global port assets, particularly those in the Panama Canal, suggests the Chinese authorities are wary of foreign interference over strategic infrastructure, even though the Panama Canal was much closer and more significant to the United States than China. Given China's extensive network of overseas port holdings, analysts speculate that this scrutiny could extend beyond the current deal, potentially impacting Beijing's investments in ports worldwide. The decision to involve SAMR aligns with China's increasing regulatory oversight of foreign acquisitions, reflecting broader concerns about economic security. The timing of this intervention is particularly notable, as US President Donald Trump had publicly endorsed the deal's Panama component during the State of the Union address, or the de facto State of the Union address earlier this year. Blocking the agreement could therefore be interpreted as a political rebuff to the US administration, reinforcing tensions between Beijing and Washington over control of key global trade routes. The fallout from Beijing's intervention has been swift. CK Hutchison's shares fell sharply following reports that billionaire Li Ka-shing is reconsidering the deal. US-based Bloomberg reports that Chinese officials are now pausing new agreements with Li's business empire while reviewing its global investment footprint. Furthermore, Hong Kong-based but Beijing-backed media outlets have circulated accusations that CK Hutchison was aligned with US geopolitical interests, further escalating the scrutiny. This regulatory action raises further concerns about China's business climate, particularly given Xi Jinping's recent reassurances to global investors about creating a predictable regulatory environment. The scrutiny of the BlackRock-CK Hutchison deal stands in stark contrast to those promises, potentially dampening investor confidence in China's market. As Beijing weighs its final decision, the global implications remain uncertain. While blocking the deal may serve China's strategic interests, it could also trigger regulatory measures affecting Chinese-owned ports and assets in other countries. This case underscores the increasing entanglement of global business and geopolitics, with major economic players now navigating an environment where regulatory and political risks are inseparable. Now, speaking of uncertainty rocking global markets, on my other new channel, Market Update, we discuss the fallout from US trade policy, specifically the rollout of new tariffs this week. I've put the link to the latest episode that went up an hour ago in the description below. If you're getting some value from today's episode of China Update, don't forget to like and subscribe. Next up, and finally for today, we move to the Chinese economy. We quickly move through several salient economic updates which we need to take note of. China's factory activity expanded at its fastest pace in a year in March, offering a rare positive signal for China's economy ahead of expected US tariffs that could strain trade ties further. The official Manufacturing Purchasing Managers Index, PMI, rose to 50.5, up from 50.2 in February, according to the National Bureau of Statistics data published yesterday. The non-manufacturing PMI, which covers construction and services, increased to 50.8. Both readings indicate expansion, though economists remain cautious about sustained momentum. It's believed, for example, that many manufacturers front-loaded their manufacturing to get exports out before new rounds of tariffs were placed on them from the US administration. The Caixin PMI, which gives a more independent snapshot of the country's manufacturing sector, came in at 51.2, up from 50.8 in February. The upbeat data comes as the Trump administration prepares to impose additional tariffs on Chinese imports, adding to the 20% duties already in place since January. China has vowed to retaliate. Meanwhile, according to new State Administration of Foreign Exchange, SAFE, S-A-F-E, numbers, China's net external financial assets soared to a record $3.3 trillion by the end of 2024, marking a 15.6% increase from the previous year, a surge reaffirming China's status as a leading global creditor. As of September, China ranked third globally in net external financial assets, trailing Germany with $3.7 trillion and Japan with $3.6 trillion, according to CEIC data. Despite this expansion, foreign investment in China recorded a net outflow of $12.4 billion in 2024 as companies scaled back overseas borrowing amid China's low interest rates. And one more economic development to cover, Chinese telecommunications giant Huawei Technologies announced significant revenue growth in 2024, with its automotive segment surging nearly sixfold and its consumer business, including smartphones, rising over 38% despite tightening tightening US export restrictions. The company reported total revenue of approximately $118.1 billion, a 22% increase from the previous year, though net profits declined 28%. This marks a recovery in revenue levels last seen in 2019, before the United States blacklisted Huawei over security concerns. Huawei's Intelligent Automotive Solutions segment led the growth, up 474% from 2023. The company shipped over 23 million intelligent auto components, collaborating with Chinese automakers such as BYD, GAC Group, and Dongfeng Motor to develop 15 vehicle models. While reaffirming that it will not manufacture its own vehicles, Huawei remains focused on providing smart control, self-driving, and infotainment solutions. The consumer electronics unit, which includes smartphones, recorded $50 billion in revenue, rebounding despite US efforts to restrain Huawei's access to advanced chips. The company launched a high-end triple-fold smartphone in Malaysia, but remains primarily reliant on the Chinese market. Analysts remain cautious about future smartphone growth due to ongoing supply chain challenges. Huawei is one of China's best performing companies, growing up in a cutthroat environment and boasting some of the country's top engineers. The company is also closely aligned with Beijing's strategic plans and has enjoyed robust subsidies from the state. Huawei continues to pour resources into R&D, especially for chips. Huawei allocated a whopping 20.8% of revenue to research and development in 2024 and plans to maintain this level in 2025. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a good Tuesday, and I will see you all, not tomorrow, but on Thursday.